Hello guys, this is your freedom trader Collins FT. So today we're going to plunge into the video straight away and the charts as well. So today we're going to talk about reversals, the reversal signal. Yesterday was the hammer, so today is the reversal signals. Most people, they don't know when a downtrend is about to reverse, or not even a reversal, a pullback also, because you can also trade pullbacks. Some people, they do trade only reversal, some people they only trade pullbacks. Some people, yeah, trading a pullback on a higher time frame, it's like a reversal on a lower time frame. So it's uh, it's the same thing. But when to know that, uh, what when to know exactly a sniper entry on pullbacks, or sniper, or um, or reversal, it's an issue, because most often people, they don't know when actually is it reversing. So they might see a hammer and they just jump in and think, hey, that is a reversal. So as I said, whatever it is, a hammer, a harami, whatever it is, it's just a confluence. All of those, they have to join up to make up a signal or a confirmation before you enter your trade. So today we're talking about, we're going to check out on the reversal signals. So using the market structure, as I do all the time, and using this moving average, it's always good to spot a signal and a crossover. So using this moving average, or let's say from here, you always have to look first at the market structure before you go to candlesticks. They will give you the detail. Market structure will give you the idea that, okay, like for example, here, this is a good double bottom. um this is a good double bottom, so it only gives you the idea that, hey, something is about to happen here, but you will not be sure that is it actually a reversal or something. So you have to zoom into the candle. You have to zoom into the candles and check what are the candles say. So most often, so many people have their own candles that will tell them, hey, when they know that when they see this candle, it's a reversal. So for me, it is two candles. Either both candles are with double bottoms, I mean flat bottom, bullish, bearish and the bullish candle together, momentum, that gives me a reversal signal. Say a downtrend, then I found a bearish momentum candle with a flat uh, bottom. Then at the same time, the next candle is a bullish momentum with a flat bottom. Obviously, that is a reversal signal, whether it's an uptrend or a downtrend. For example, it's something like this. This is a good example of what I'm saying. When you see this, whenever you see this, this is a good sign. This is a good sign of a reversal. Yeah. Whenever you see this, it's a good sign of a reversal. So this was a downtrend. This was coming down. Though you might be expecting it. Say you did put your take profit here, thinking it's gonna hit this support. But when you see something, when it comes down and it reaches here and you see something like this, you don't have to wait. Like, this is already telling you it's a reversal. Obvious reversal. Same thing happened here. You see, it's the same candle. So these candles are unique with AUD USD. Some other pairs might have their own um, candlesticks that will tell them or interpret reversals or whatsoever, but with AUD/USD it's most common. So you see same flat bottom with a little wick, and then this bullish candle was like, hey, the market is, there are a lot of buyers. Then at the same time you have the same candle with the same momentum, but at the opposite direction. So this goes right away. Don't mind about the wick, it's already obvious this is a very big body. So the same thing happens here, and this one also is one of the best reversal signals as well, but it's a confluence. Like this one, you can only trade it by putting when it comes very clean and clear like this. See the same thing here, but the bottom, the head is so flat, there is no wick, so you can't count that like completely. You can't be confident about that one, and it's bearish. So the same candles I was saying, it's almost something the same here. So markets actually comes down, then the next candle is a bullish momentum candle that breaks above that breaks above the last price here. It tells you the market is going up, so you'll be seeing same candles. So you see the same thing, and this one is very different because it actually breaks the moving average. Yeah, it actually breaks across the moving average after a long period of consolidation. Yeah, after a long period of consolidation, this is another confluence here that is very important. So after a long period of confluence, we've seen the market try to go up, come down, go up, come down. But here the bearish actually broke. It did break here, but what happened? It didn't break the last closing price here. It didn't break at all. So this was actually a position where you could say, okay, the market has broken the moving average, but it quickly went back. So it quickly went back, and this other candle, the second candle, did not break through. It just went back. Then here is the same thing. So here also it actually did break, but it didn't continue. So a good signal here is this one. Yeah, it did break. It did show a bullish candle which has a long wick, almost an inverted hammer. Then the next candle following up with these signals I was talking about, it's either up or down. It's pure confirmation that there is a signal, there is a reversal, and it's a sell. So the next one now breaks this bottom level and it sells straight away. And when it breaks this consolidation box, it's a sell. Like you have to take your profit from here. This should have been the first take profit after it did break. So consolidations are good, especially when they are being broken, and especially when it's not a fake breakout. Yeah, so first TP was supposed to be here at this level, then it did break. You see the way it breaks here, it comes down. Yeah, you have to, candlesticks, very important, very important. The first candle came, tested the level, tried to go up. The second one did just break it completely. Then always whenever there is a breakage, you don't sell, you wait for a retest. As you can see, This is the signal for a pullback, for a retest, a bullish, a bearish momentum, and a bullish momentum at the same time. So this is where you start looking for sales. So whenever the market breaks, you don't breaks a support until it retests the support. Always wait for the retest until it retests the support before you sell. So it did retest here, it did broke, it did break, went up, but always it comes back. So a sell was supposed to be at this point, because how do you know it's coming back here? It's from this candle. This is the candle that was supposed to give a sell. So after this candle, you can put your sell stop here, then you take your profit here. It looks small, but it's almost about 200 pips or 150 pips, which is confidentially a sell. And always with this big bearish momentum candle, it's of course very sure that the market is gonna sell. No matter how it did retest here, it gave a signal also with this candle. Yeah, that is a shooting star. It gave that signal. It came here, tried again to break, it didn't break. You see the way it's testing the levels, just testing the levels and not breaking, and it struggled, and again another bearish momentum that did break the moving average and went right down. So candlesticks are the key. Market structure, price action, candlesticks, they'll tell you everything you want to know. So you see, so the breakage out of this box was very significant. When there is consolidation, when there is market consolidation like this one, you have to know the next move is going to be a very big one. So this was a signal already. Imagine a good trader, you enter here, and you know usually when it breaks here, it will come reach here and then go back, and it will go back and retest. Usually it comes back and retest when it hits maybe a level like this one. Yeah, it could hit here, comes back and retest, and then you re-enter here. But this one, it didn't happen. It just went straight down, and you could see how long it went down after the consolidation was broken. You see how long? This is crazy. This is crazy. And to hold, this is another secret, how to hold your trade. When it's coming down, you don't get out until you see the same thing that did break the moving average, until you see the same movement on the breaking also bullish, breaking also the moving average. Then you can start thinking of bringing down your stop loss or getting out. So that is, you can use the moving average also to hold your trades or to get out. So here it came, it tried, but it didn't break. Yeah, here it didn't break. It just closed almost below the moving average. Then this is where, when you see this, already seeing this candle, this candlestick would have been like, because it's almost the same thing like this one, and it's a breakage, it did break the moving average. Then you'll be like, now this time around it can go up. Then you can then get out of the trade and observe the market movement, price action, and observe. At that time you are already out with almost about 500 to 700 pips. If you could hold, you hear people saying that they held their trades for almost 3 months, 4 months. These are the type of trades. You put just $50, or you put imagine you did put a standard lot size with this one. That's a good trade for you. That's a good trade. So the same thing you are doing here with this weekly time frame, you can still do it with the 1 hour time frame, 50 minutes time frame. Hold your trade, get out at the right time, get in at the right time using candlesticks and the moving average with the reversal signals. Thank you guys.